Good day, all. Ira Epstein with your financial market wrap-up for this Tuesday, and this is the 8th of October, 2019, and we're already into Wednesday's trade because I'm after 5:30 p.m., and you can see how the markets are bouncing a little tonight, ever so little after a big drop today. I want you all to remember that tomorrow is also Yom Kippur, the Jewish holiday. It's the holiest day of the year, so the volume from the Jewish traders is probably going to be off rather dramatically. Expect that. They'll be back at the end of trade tomorrow, so they'll be back to business as normal on Thursday for most of them. But in looking at these markets, you've got to start asking yourself, with all that's going on, the U.S.-Chinese talks heating up. I just saw that Apple took off the Taiwanese flag on some of the phones it's shipping out in Asia. So they're trying their best to walk that thin line. The NBA is going to lose a couple of games on preseason internet and television in China. There's now more talk other companies might be threatened. We saw the U.S. today put on new visa requirements. They're going to deny them to certain people in different provinces where they think human rights aren't being followed in China. And this is supposed to lead up to a positive Thursday beginning of trade talks. It's me. I don't see how that's possible, but that's me. So let's go to the charts. Enough with the politics. As I see it, the market's under selling pressure, and something important's happened here. We've got a pattern of lower highs on a closing basis and lower lows, and we're staying so far under the 18-week moving average of closes. Be careful if this market starts taking out this 28.55 level. It will look more and more, if that occurs, like we're back into a replay of last year's final quarter. And you remember how ugly that was. It was really terrible. Here you are. Remember how this thing fell apart from October down? Is this a replay? I don't know, but I'm certainly aware of it. It's in my headlights, let's put it that way. In looking at the chart action, you can see how the market's been failing on the rallies. We can see that the pattern has been one pretty consistent of lower highs, lower lows. That's bearish. With the current action, to negate this level of the bearishness, you'd have to get back up and over 29.59.5. I'm not saying that can't happen. It's only 65 points or so away. You can see two levels of resistance. First, you've got the 100-day moving average of closes and the 18. This 18-day now has fallen right into the zone of that last rally high, as you can see. If the market drops from here, one of the numbers it missed 4 days ago or so was hitting the 200-day average. Now, there's no magic there. It didn't have to hit it, but it was something that in my newsletter I had been writing about, that if the market falls in the past, that's what's been holding this market. The question is, will it do it this time? You can come back here and see that. I left it all on so you can view that. Where are we? Back down today to the lower Bollinger Band. Remember, markets often look at Bollinger Bands for support and resistance levels. This one's pointing to the downside, and it's starting to hit it on a regular basis, but momentum is oversold. I define the momentum on the slow stochastic as any reading under 30 is oversold. Now, there's no magic to that. The market can go down and lock in what's called an embedded reading. If you look on this chart, it's when an embedded reading to the upside happens when the blue and the red, they're called K and D lines, go over 80 and stay there for several days or more, and corrections often, not always, will begin with first the momentum being lost to the upside by the red line getting under 80. Well, you haven't embedded in this market in a long time, since back in June, and when you lost it, see right here, you can see how the momentum, the market took off to the upside. We haven't embedded yet. That is not the same picture. When I come to the NASDAQ, the market, as you can see, is failing at the 18-day average of closes. Its battleground, I thought, would be better held at the 100-day. It so far isn't. Now I've got resistance back up on rallies to these two numbers with support at the lower Bollinger Band. If that gives ground, then do we get to the 200-day average of closes? Again, momentum in this market pointing down, but unlike the other indices, not, I repeat, not in oversold territory. Still a bearish picture here. Bearish picture in the Dow, and finally, the 200-day moving average. See these two dots? That's them. It took 200 days worth of data here plus for us to be able to plot that finally, and we've got it. Lower highs, lower lows under key averages. What you get nervous about is if these 18-day averages ever get under the 100. You'll hear crosstalk to the bear side on that. Remember I said that now because if it happens, that's going to be a common theme. You've had that bear talk right here. This chart just got very hit in a bad way. You've got the 18-day average, got under the 100 in green. The green got under the 200. This is a very bearish looking chart action. A lot of resistance on rallies back up here. We'll see if the market can do anything with it, but it isn't looking pretty. This week's weekly charts on Friday will be something you want to look at. When we look at the VIX, the market's coming up now for the upper Bollinger Band. Now, often, the word is not always, markets, the pros like to sell this number. I don't know if they're going to do it tomorrow. Why? We get at 1 o'clock in the afternoon the FOMC minutes. I think the traders are going to want to see that before they act. So I wouldn't be surprised if they hold back. Anyways, I'm bothered here. You're getting the crossover bullish. You got the 18 over the 100 day. You've had the pattern of higher lows, higher highs, but now you've got a bullish crossover in the charts as well. Momentum pointing up, bias up. Resistance 2064. In the T-bond market, we've had a pattern of lower low, higher high. Now, if you saw Fed Chair Powell today talk, he said that what the Fed is going to do is they're stepping into the money market area and they're going to keep providing to the repo market the money that they need. The Fed's going to buy more treasuries. They're going to swell their balance sheet by a bit. They're not going to call that quantitative easing. And I understand what he's saying. He's not talking out of both sides of his mouth. He's not trying to help the economy more. He's helping the money market situation with these bonds that are being bought. Remember, who's buying these bonds? The amount that's being bought, what's being issued. The game has changed, and we're seeing as fear comes into the market, we're getting a lot more requests for what? Still positive securities that you can put in a portfolio. When we take a look at the 10-year notes, we have the pattern here. I don't know what this is going to do quite yet. We've got the lower low, higher high. Resistance 132.10. Here's what you're starting to develop, that embedded reading. Now, could this market get jolted to the negative side if there were a U.S.-Chinese trade agreement come Thursday or Friday? Absolutely. I mean, the last thing I think we're all expecting now is a positive outcome out of that, given all the rhetoric that's picked up. I'm personally am not even thinking the meeting's going to happen. I think the lower delegates are here, and I think the upper ones, I don't expect them to come from China. I want to be wrong. I want there to be a deal. It's just, I'm reading the rhetoric. I don't see, I wouldn't come. In looking at TLT, higher lows, higher highs, outside day up, embedded reading, everything's still bullish. A warning sign would be taking out today's low. Why should the market take out today's low if all that positive news, when I'm saying negative news in the economies, positive news for this market is taking place? Resistance 147.13, take out today's low, and I'd be concerned if you lose the embedded reading, then I think you could make a run potentially to this lower Bollinger Band, but until that happens, I'm still in the bull camp. In the dollar index, the market has still got the pattern of higher lows and higher highs. Will the market be able to get up to the upper Bollinger Band is a question, and it turns bearish, in my opinion, if the prices get under 98.30. That would start a lower high, lower low pattern, and I'd look to see if momentum joins in at that point. Who's got control of the market going home? The bulls. Support probably in this 98.40 and a half zone, the 18-day average of closes, but take out 98.30 and I'll issue the warning sign. In the eurocurrency, as you can see, we're pretty flat tonight, haven't gone anywhere. The pattern has been lower highs, lower lows. The reversal in this market potentially comes on a move over 110.58. Take that out, you're over the 18-day average. You'd have set up at that point higher lows, higher highs, and that could be the first buy signal we've had in that market for a very, I got to keep going back further, maybe for the summer. In the British pound, It's a total mess. Yeah, Miss Merkel, and Mr. Johnson from the UK, the Chancellor Merkel, they went at it. It doesn't appear that there's deals happening there, and you've got oversold down to the Bollinger Band, but there's nothing bullish on this. And again, you're playing the politics. I have no idea how that's going to turn out. In theory, the word is theory in the UK, there's supposed to be a presentation October 11th and no later to Parliament as to what Mr. Johnson is going to do. I didn't even see the final court order today from Scotland. In the Japanese yen, you've still got the pattern of higher lows, higher highs. Now, the market has stalled out consistently over the past week or so at this upper Bollinger Band. It's falling back to support at the 100-day average. The bulls are in control unless prices get under this last break low of 90, what is that? Let's get to it exactly. It was 93.45. Now, that's right at the 18-day average of closes, so that would be an interesting number to see if that occurs. In Bitcoin, you still have the bearish embedded reading. Until that's lost, I look for prices to drift, maybe drop here. They've run out of momentum at this point in terms of breaking, but if they get under 77.45, you might be at the 7,000 level. Lose the embedded reading, and I'm back to looking for the 18-day average of closes on that chart. WTI and Brent crude, well, this is the differential, and you can see it's 564. The API numbers came out, and I thought on their own they looked friendly to the WTI. There was a net draw of, I think, 4 million barrels plus in that, and at this time of year, you typically get about a 2 million number on that. Very, very nice draw on that. As you can see, Brent still not rallying. You got to think of world events that are taking place and how it's impacting these markets. We haven't heard a word from Iran doing anything in the Middle East at this point. Still coming down. I think that's because the U.S. and China are taking up all the news with their spats. In WTI, this is with what I thought was a friendly number, and you're still down 17 points tonight. You have an embedded reading. I'll look for a rally if you lose the embedded reading, with the red line getting over 80. It's not there, and until it's there, I think the bears keep selling this market. A lot of resistance here, as you can see, at the combination of the 18 and the 100-day average over the market. But to get there, you've got to change the chart pattern. You would have, in that case, higher lows, higher highs into that resistance number. Probably, if you get over this 54.06 level, it signals the end of this leg of the downside. Doesn't mean you're in an up leg. In the gasoline, you can almost see what's going on. The higher high, the lower low, there's a battle right here. And that battleground is the green line, the 100-day moving average of closes. Momentum up, bias down, no trend, as I call it. In nat gas, lower highs, lower lows. Now, the first hard freeze is coming in from what I saw on the weather maps next week. So it's going to hit this weekend in parts of the Midwest, supposed to drift down, and the corn growing season, maybe in the soybean season in the South. And if that occurs, then we start looking at what nat gas does as people turn on their heaters to stay on the warm side. One of the things that we talk about here, and I try to talk to you about, is a combination of times at fundamentals at the beginning. I hate to do the politics. I'm going to stay away from that. But I have to talk about what's going on between China and the U.S. And then we take that into what's going on in currencies, what's going on in the interest rates, the energies. I mean, there's so much you can't get away from on that. But politics, I think we just stay away from that altogether. In terms of our top trades and our Treasury numbers, this all comes out in our different reports. Now, if you haven't seen what we write for our clientele, maybe it's time you do so. How do you do it? Well, we'll give you a free trial if you haven't tried it. And by the way, no credit card, none of that asked from you. Just go to www.iraepstein.com, fill out the form where it says free offers. Just click that on, you'll be right there in 2 seconds, choose what you'd like. Click up here. If you're watching me on YouTube, it'll take you to that page. Again, remember, it's a Jewish holiday tomorrow. I will not be putting out a morning update, but I'll be here in the afternoon. You take care all. See you tomorrow.